I think the big thing here is like this, the meme date the was it marry the house, date the rate. Like
Yeah.
I personally dislike the meme, but the concept is true because the 30-year fixed rate mortgage is in fact the most powerful financial instrument that the US consumer can have. Like just think about these dynamics, and this is where you can go deeper with someone, right? You buy a house today. I don't care what the rates are. Say the rates are 7. If a year from now rates are 10, guess what? You are cheering that you have a 7, right? Like you did it. You locked in the 7 and rates went to 10 and no one can take it away from you. On the flip side, if you lock in a 7 and rates go down to 3 or 4, the consumer, the homeowner, has a one-sided decision, right? They have an option. They can refinance and take advantage of that lower rate, where no matter how high rates go, no one can take that mortgage away from them, right? They can pay the mortgage off whenever they want, but no one can call the mortgage due, and there's no penalty to paying the mortgage off. It is literally the most powerful financial instrument. If you think about, like, again, I don't know how sophisticated some of our agents are with trading. Like if you look at options markets where you can buy options on stock futures or bond futures, like I do a lot of this stuff, and hedging on the mortgage portfolio side, it's very expensive. Like having an option like that costs a lot of money to say, hey, I want to be able to buy the stock at a price or sell the stock at a price, but no one can force me to do it. It's at my option. So you limit your downside risk. Homeowners get a free option when they put a 30-year fixed rate mortgage on a property. And this is why a lot of people who even could pay cash for a house will still take out a mortgage because of the power of that option. Imagine the people who, instead of paying cash, took out that 3% rate and now they can invest their money. Right now, you can get a 5 and a 6 and a 7% yield on certain types of guaranteed short term fixed income. Even people who bought a mortgage at 5% can now invest the cash at more money. And guess what? If the market goes the other way and rates come down, the consumer at their sole choice can decide to refinance. And so the power of that option is what makes it to where there is no reason to wait. You don't need the rate and the price to align in order to have success in a real estate transaction, because you as the consumer have that powerful option. If you wait and rates go up, you lost. If you wait and rates go down, you still lost because you could have refinanced. It really doesn't matter what happens. You lose by waiting in real estate. And we can go back to any period of time. If you held a house long enough, you would have won. You know, like if you go back and you look at folks who bought at the absolute worst time. I have properties that I bought at the absolute worst time in 2008, at the peak right before the crash. Maybe it was 2007. Those properties are worth way more today than they were when I bought them. If you hold out long enough, and the reason you can hold out long enough is because you have that powerful option, that powerful one-sided financial instrument that is a 30-year fixed rate mortgage. Guess what type of mortgage does not have that power? An arm. And this is why so many people got in trouble back in from 2007 and 2008, is they took out the arms. The arm, you don't have the option anymore. Now, when the arm period ends, the bank gets to raise your rate, they lower your rate, like they have control of that option now. And so this is why the 30-year fixed rate is so powerful. We're one of the few countries in the world that has that sophisticated financial instrument, but it is the sole reason why waiting does not matter, and why it's almost always important to put a mortgage on the house. Even if you can pay cash, I still encourage people to put the mortgage on the house, because that gives you that option, and you can always pay it off later, right? Like if something changes, write a check, pay it off, get your cash back. But if rates do go up, you can't go back in time and lock in that low rate like a lot of people have seen from the pandemic.